Back home on the Lal Street yesterday, the market erased the gains in last hour of trade after the rate cut cheerily ebbed away. Nifty gave up the 11,100 mark to end marginally lower, while the Nifty Bank, on the other hand, turned negative after RBI policy, with 6 out of the 12 constituents declining. The mid-cap index, now that one, however, outperformed, a surprise from what it has been behaving earlier in the week, because that index ended with an uptick of around 0.7%. But that was about yesterday. A lot has changed overnight in terms of what happened with the trade talks between US and China, as well as a lot of results. Manglam, what are you watching out in trade today?
I'll be watching out for results more than anything else, Anisha. And, the trade talk bit, it keeps fluctuating week by week. So let's see how much of that is actually taken in its stride by the market or not. But in yesterday's trading session, if you just take a look at the intraday chart yesterday, will tell you it looked like a wild roller coaster ride, if you must. But that roller coaster ride was limited by just about 75 points. So in that regard, yesterday's high of 11,118 and yesterday's low of 11,044 both become important levels to watch out for. That is the roller coaster that I have been talking about in yesterday's trading session. If you take a look at the contribution chart, now it was interesting in a sense that over the last many trading sessions, it was Reliance, HDFC Twins, L&T, as well as some few heavyweights which were lifting the mid-cap index, kept it afloat, while lifting the frontline index, kept that afloat, while the mid-cap index saw some distribution. However, in yesterday's trading session, the absolute reverse happened. It was the heavyweights which dragged the index, and the mid-caps outperformed. Advance decline 4:3 in the favor of advances. So by and large, the sentiment in the mid-cap index was fairly good, led by financials. However, the beleaguered companies continued to decline. We had Reliance Power, Reliance Infra, Reliance Communications, Relcap, all of them down between 40 to 62% in this month itself. So that was a bit of a what do you say, fly in the ointment, if you must, for the mid-cap space. But today's trading session, all eyes will be on Tata Motors. A lot has been spoken about it overnight. We've seen a decline in the ADR, a net loss of 27,000 crores. Even if you adjust for the impairment, it is 3/4 of losses for JLR. Keep an eye out on the fact that despite these weak news pieces coming in, the Nifty is held aloft with a lot of flows. So the FIIs and the DIIs, both of them putting in their bit in the cash market over the last two trading sessions. And not just that, this month itself, both FIIs and DIIs together have added a little more than $500 million to our indices. The FIs are not only buying in cash markets, they're also buying in index futures. They started the series with 41% long exposure. Now they're at 53%. But the global screen is jittery. The SGX Nifty indicates a mild cut. Let's see where we go from that mild cut, because crude has fallen sub $62 per barrel mark. And watch out for the 11,000 mark. That is the fulcrum for which both bulls and bears are fighting. Both calls and puts have maximum open interest at 11,000.
Okay, so the global cues are jittery, but you did talk about a lot of stocks. For example, Tata Motors, there's a lot of mid-caps. What are the key stocks you're watching out for trade?
Well, everyone will be talking about Tata Motors, so I'll skip that for the later part of the show. Britannia out there, the volume growth came in at 7% versus a poll at 10%. What did not do for the volume growth, the company made up for price and mix. However, more than the reported results, it was the commentary which was astray from what all the other FMCG companies have been saying. So the management has said they witnessed slowdown in marketplace in the recent months. It will be very important to see what exactly caused this and what is happening going forward. However, the two big things that the street kept talking about: Coffee Day's stake in Mindtree, Varun Beverages getting more stake or more states. If someone told me these two data points are going to come by in the same day, I would tell you, well, you're lying. Delhi must be slowing. And well, all of that happened. So there was snow in Delhi. Coffee Day, well, the promoters said they will go ahead and sell the Mindtree stake, and Varun Beverages will acquire more franchise rights in MP, Maharashtra and Karnataka. So that's the FMCG pack. And talking about FMCG, the absolute reverse took place in SAIL. Nigel tells me it's most FMCG companies this time chose top line over margins. SAIL, on the other hand, chose margins over revenue. So revenue from operations was just about 3.3%. Margins expanded from 9% to 16.28%. Jet Airways, however, 4 aircraft grounded due to non-payment of amounts outstanding to lessors under lease agreements. That would be a negative for Jet Airways. Suzlon, revenue has halved, losses have expanded. Finance cost is still flat at 335 crores. I perhaps reckon it would be more than the market cap of the company after the big fall that we've seen. HCC as well, finance cost at 173 crores. Aurobindo Pharma, we'll end on a good note. Ekta tells us is a good set of numbers led by the US markets, which were high at 27% year on year.
Okay, at least that's some good news in terms of Aurobindo Pharma. But